Welcome to the Lifestyles Unlimited Real Estate Investor Radio Show, a real estate investment program. Listen and learn how to use real estate to build wealth and passive income streams for you and your family. We bring you experts every day to discuss and answer your questions on everything from single-family homes all the way up to 600-plus unit apartment complexes. And now, the Lifestyles Unlimited Real Estate Investor Radio Show.
Welcome to the Lifestyles Unlimited Real Estate Investor Radio Show, where, as always, we're working on your financial freedom. It's my privilege to be joining you today. I'm Mike Harrison. Today, I will reveal what I believe to be the fourth type of income. The IRS defines three types of income: passive income, active income, and portfolio income. I've identified a fourth type of income thanks to real estate investing. I bet you didn't know there's a fourth type, but there is. It's an incredibly powerful type of income. I'm the personal recipient of the fourth type of income. This year for me, regarding the fourth type of income, will be big. Took a few years, but here I am. I expect more of the same next year and the years after that. There's no reason why this fourth type of income will not continue to produce on my behalf. And stay tuned. Later in the show, I'm going to dig into just what this fourth type of income is and how you can create this fourth type of income working on your behalf. It's very, very powerful. I want you to stay with me. For now, I'm going to talk about our recent Lifestyles Unlimited Wealth and Passive Income Expo. Our 2022 Expo was just held in Houston, Texas. Huge turnout, as always, people from all over the country. I love seeing old friends and making new ones. The Expo is a great place to reconnect with your fellow Lifestyles Unlimited members and real estate investors from all over the country. Thursday was our multifamily Masters Tour, and if you're not aware of what that is, if you're interested in investing in apartment communities, you should check this out sometime. Literally, we'll gather people that want to go see these apartment communities, actual communities owned by our lead investors. For you non-Lifestyles Unlimited people, that's a syndicator. That's a person who buys a multifamily property. Well, you get on the bus and you get to go see 4 of these properties. You visit them, you get to tour them, you get to understand what the property was like before, you get to understand the transition to make it a better place to live, the transition to make it a better business. You get to ask the leads questions, anything you want. Ask other people, other investors, talk about the properties, visit them, touch them. So you visit 4 and then you come back and you debrief. And you review what you learned. What's this property? What's the difference in that one? What makes that property really good? What did you see today? But the Expo, Friday and Saturday, were 2 full Expo days. And really, our Expo is just an incredible educational event above and beyond anything else. We have classes in 5 different categories: beginner real estate investor, someone who's new to Lifestyles Unlimited. Another category is single-family investing. Everything within that category is about investing in single-family properties. And then, of course, 3 different categories within the multifamily side: the independent rental owner, lead, and passive investor. Friday, from 10 a.m. to 6 p.m., 4 breakout sessions, so you can attend 4 different classes on Friday. Now, we had 38 different classes to choose from. Saturday, that was our General Assembly at 8:30 a.m., but after that, from 1 p.m. to 6:45 p.m., 4 breakout sessions, 37 different classes to choose from. This is an incredible educational event. Now, wrapped around these classes and in between, you had networking opportunities, breakfast, lunch, dinner. We had preferred area mixers where you can meet other investors. We had open bar, that sort of thing. It was just a great event. Now, what kind of classes can you expect at our Lifestyles Unlimited Expo? Obviously, I'm not going to name them all. We had 38 on Friday and 37 different ones on Saturday. Now, some of them repeat at different times, so if you can't get it during a certain time, you can pick it up at a different time. These classes, for instance, here's one: a practical guide to managing your real estate wealth. Another, the journey from passive investor to independent rental owner or lead investor. I took that class myself. How to finance 10 properties in 10 months. How to retire in 5 years or less. Several of these are panel discussions. We had one, the super women of real estate. And these are women that have invested and literally done incredibly well as real estate investors, lead investors, passive investors within real estate. Had another LLCs for fun and profit, multifamily accounting for beginners. And then there's this class I took on Saturday, And the title of it is How I Turned $400,000 into $4.45 million. Yes, you heard that right. 400 into $4.45 million. It was really a case study I attended. It was this class that provided the inspiration for today's show. You see, there's just no way to go from $400,000 to $4.45 million in 10 years without the power of what I've discovered as the fourth type of income. Quite frankly, the fourth type of income that will make you wealthy and financially free. But you need to stick with me because I'm going to explain it later in the show. Now, these classes that we have that I mentioned, are we hiring outside people to teach multifamily accounting, for instance? Absolutely not. These classes are taught by actual members of Lifestyles Unlimited who have lived the life, who have walked the path, who have accomplished what we teach here at Lifestyles Unlimited. They're taught by our mentors. They're taught by real people. That's the bottom line. Real people. These are people you know. If you're networking within our group, you know these people. In fact, I know the gentleman that did the class, the 400K to the 4.45K. I'm not going to share his name. Let's just call him MJ, for example. He's real. You can walk up. You can talk to him. You can ask him questions. He's been a member for a little bit more than 10 years, but real classes taught by real people. Now, if that sounds intriguing to you, I want you to make plans for next year because our expo has been announced. It's in February, Irving, Texas.
Del Walmsley on how to live the lifestyle.
Can you buy something for $25,000 and renovate it? Yes, you could. If you bought it, rehabbed it, and had 25 grand in it, all you'd have in it in equity is 25 grand. If you had the 25 grand in the first place, you'd have 25 grand. So you're not making any money on doing that because you can't get the money back out of the house unless you sell it. If you do, now you have to pay taxes on that money, so part of that money goes away. But do you think 1/3 is going to buy you houses in an environment where the average home in this country costs $350,000? If you bought one at absolute steal price, which would be $100,000, you'd have to put 20% down, would be $20,000. That you can, with $20,000, go out there and buy enough houses to buy 15 houses? The answer is not during this market conditions.
My name is Mike Harrison. You're listening to the Lifestyles Unlimited Real Estate Investor Radio Show.
Welcome back to the Lifestyles Unlimited Real Estate Investor Radio Show. Now, let's get back to your map to financial freedom.
Welcome back. I'm Mike Harrison. Today, I'm going to share with you what I've identified as the fourth type of income. You see, the IRS defines three types of income: passive, active, and portfolio, and they tax each as such. I've discovered a fourth. Now, I need you to keep it a secret. I don't want the IRS finding out about this. They take enough money from us as it is, so I'm not going to tell them if you don't. If you have any questions about Lifestyles Unlimited, who we are, what we do, how to get started in real estate investing, we are a real estate mentoring and educational group. We have members in all 50 states. Been in business for over 30 years. Please send me an email. My email address is, and I respond personally, askmike@luinc.com. askmike@luinc.com. I'm not going to reveal that fourth type of income until later in the show. I want to share some thoughts regarding inflation in the United States right now. Typically, inflation's in the background. It affects us, but it really, not to an extent that we worry about it too much. It's a little different right now. Inflation's real. Historically, for hundreds of years, the definition of inflation was always the expansion of money. So if the money supply expanded, the definition of that is inflation. Now they've changed it somewhat, but that definition is really the right, correct definition. And what we're facing today, as I see it, is essentially a three-headed monster, if you want to call it that. We've got inflation coming at us from three different angles. Follow me. So we've got our supply chain issues, and I'm not going to go into what that is. I think you understand if you're paying attention. A result really of coming out of this COVID lockdown and some of the regulations on trucking, that sort of thing, getting these ports, getting some of this stuff unloaded. So supply chain issues as the economy has shocked back. You had the pent-up demand. The second head of this monster is energy costs have increased substantially. That one I'm going to pin solely on the Biden administration. This was brought on purposely. Vicious regulation. Essentially, you've got your boot on the throat of the energy producers in this country. Constrained supply. Yes, fourth grade supply and demand. You constrain supply, prices go up. That's how it works, like it or not. And then the third head of this three-headed monster is an increase in the amount of money in the system chasing finite assets. Classic inflation. More money. If you helicopter money in over an island and you drop it on that island and you don't add to the production or to the goods, literally the cost of everything on that island is going to increase because there's more money chasing amount of finite assets. That's going on right now. So you've got a three-headed monster. Now, why am I going into this? I received an email from someone saying, hey, inflation's really just a wash because as the cost of goods go up, our wages are going to go up. I would say this. I would say even if your wages could keep up, inflation is still bad. And here's why I say inflation is still bad. Your wage or salary may increase. Guess what doesn't increase? Your savings. Your savings will pretty much stay the same. So while your salary, let's say your salary doubles and keeps up with prices. If your salary doubles, your savings in the meantime have been cut in half in regards to what that savings can buy. So if you saved money 30 years ago, or if you're saving it today in the hopes that 30 years from now, you can use that for something to purchase, and you're basing it on the price of goods when you start the savings or the price of goods today projecting into the future, you're going to be in for a nasty surprise. This is what's so insidious about price inflation. It positively discourages savings. It also encourages people to jump into investments they may know little about and are beyond their normal risk tolerance, let's say. Really, just because they're trying to preserve money's purchasing power. This is dangerous. This is dangerous. Before the advent of fiat paper money, people could accumulate cash and see its value pretty much hold steady. And that's no longer the case. So I worry about the elderly. Why? Because they're historical savers. They're 20th century people. I worry about those savers. These are people shaped by the norms of the 20th century. For the greater part of the 20th century, saving was a rewarded strategy. Paying off your home was a rewarded strategy. Not anymore. We have a fiat currency. Our currency is not based on anything. It used to be based on the gold standard. That's gone. Compound that with reckless monetary and fiscal policy by the Federal Reserve and the U.S. government, and you have what we're living through today. Where am I going? January 2022, inflation hit a 40-year high, 7.4%. February 2022, not to be outdone, a new 40-year high, 7.9%. Friends, March is going to be even higher when they release the numbers. And these are the numbers that they share. It's honestly higher. We know it. 3 years ago, when inflation was 2% and interest rates were 3 or below, I was telling you then savers are losers. You can pull my shows and hear it for yourself. Today, times are much more dangerous. But I don't want you to make a move out of desperation. I want you to make a smart, logical, effective move with your money. But if you're saving, today's the day, friend. Now is the time. You got to stop. If you're sitting on a pile of money, you got to put it into something. You got to put it into, well, personally, I'd like to see you put it into a cash flowing real estate asset. That's me. But don't make a move out of desperation. Dave Ramsey comes to mind, and I know at times you may listen to the show and feel like we give him a hard time. I will tell you, to get out of debt, Dave Ramsey has the best plan in America today. Absolutely perfect plan to get out of debt. It's the second phase of that. What do you do on the backside to where we differ? I purchase real estate assets. Dave Ramsey guides us in a different direction, but he does have a saying. He says, stupid and desperate are cousins. One is usually found hanging around with the other. I wholeheartedly agree with him on that. So when you get desperate and you make a decision, chances are that's going to be a really stupid decision. And it's going to hurt you much more than you may think it'll hurt you. So don't make any desperate decisions. Think this through. Get educated. Make effective decisions. My name's Mike Harrison. We're going to come back and we're going to talk about that fourth type of income that I've identified.
It's not just the money, it's the lifestyle. Here's Del Walmsley.
You got to be a winner. People who win get everything. People who take second and third get nothing. That's just the way it works. And so you have to realize that in sports and athletics and fitness, give you the kind of self-control, the kind of competitiveness that's necessary to go out in the world and succeed at business. To succeed at finding a spouse and commanding a relationship that's worthwhile. And not just taking some schmuck into your life because that's all you can get, settling for this weak example of a spouse. Many of you know that. When I say that right now, you're going, man, I know. I just took what I could get. But you don't have to. But you have to be aggressive. You have to be a winner. You have to know what winning means. You have to have a goal. You have to go after the goal. And athletics taught me how to be a winner. I got to the level where the next level was national professional bodybuilding, which meant I would have to take a ton of steroids. And I just made the decision. I didn't think that was where I wanted to go with my life. Maybe that decision was made because I thought, I've beaten people that are natural before. They have a better natural physique than I do, but I beat them with a little bit of steroids. Now, years later, I look back and I find out I was wrong. I could have, because I now understand what I didn't understand back then.
This is the Lifestyles Unlimited Real Estate Investor Radio Show.
Warning, listening to the Lifestyles Unlimited Real Estate Investor Radio Show will change your life. We will teach you how to create wealth and passive income so you can be financially free. And now, back to your host.
Welcome back to the Lifestyles Unlimited Real Estate Investor Radio Show, where, as always, we're working on your financial freedom. It's my privilege to be joining you today. I'm Mike Harrison. If you have any emails, any questions, any concerns, anything you want to talk about, I'm here for you. Send me an email. I'm here to help. My email address is askmike@luinc.com, askmike@luinc.com. Who am I? I'm a Lifestyles Unlimited member. I joined in 2013 and learned how to effectively invest in real estate, how to make proper moves, how to buy property in a correct manner. So yes, I've been a member for 9 years. I joined in 2013. But I'm a real estate investor, both single-family homes and apartment communities. I actually began 11 years ago. I began prior to Lifestyles Unlimited, and I'm a partner today in over 3,500 doors of real estate. If you missed the earlier sections of this show and you want to pick it up, well, there's 3 easy ways I can recommend that you do that. The easiest might be just to go to our Lifestyles Unlimited website. That's lifestylesunlimited.com. You can click on the radio button there. You can find my show, and you can find the Lifestyles Unlimited shows from the other host, and you can find the Del Walmsley radio show there. And Del Walmsley's the founder of Lifestyles Unlimited. My favorite way is every smartphone has the podcast app. Find your podcast app, subscribe to the Lifestyles Unlimited Real Estate Investor Radio Show. Very simple. That show will upload onto your phone, and then every time you're driving somewhere or out mowing the lawn or go for a walk, you can dial that podcast up. It's the easiest way to remain in tune, I guess, with what we're doing here at Lifestyles Unlimited and what we're doing as real estate investors. And then, of course, you can find us on YouTube. We have our own YouTube channel, Lifestyles Unlimited. Now, if you're interested in what we do and you want to learn more, the best way to do that, we have a free workshop. That's lifestylesunlimitedworkshop.com. That's where all of us start. That's where I started. It's online today. It used to be in person, but you can tune in to Lifestyles Unlimited Workshop. Tune in. It's interactive. Ask questions. We'll show you how we make money 5 ways on single-family properties, 6 ways on multifamily communities. Keep in mind, that secret is going to lead you to that 4th type of income that I'm going to share here in just a little bit. Now, if you want to join Lifestyles Unlimited, we're running a promo right now. That's GiveMeTotalFreedom.com, GiveMeTotalFreedom.com. If you use promo code SAVEBIG, all capital letters, SAVEBIG, no spaces, it'll drop the cost of our membership down to $297, and that's for 2 years. That is a absolute bargain, my friend. That will get you into the expo. That will get you the ability to participate in our 16-hour financial freedom seminar. And that's where we'll teach you how to invest in real estate, how to create passive income, how to buy your life back one chunk at a time. That's how I started 9 years ago. And today my life is night and day different. I can't tell you how different it is. We're happier. We're more secure. I sleep better at night. I'm not constantly worrying about my retirement fund or trying to pay for college or trying to do this or do that. It's just incredibly powerful, but it takes time. It takes diligence. It takes education. And that's what we're here to do, is we can teach you how to do that. Okay, types of income. The IRS defines 3 types of income, and they do so because they tax them differently. So the 3 types are passive income, active income, and portfolio income. I personally have discovered a 4th type of income. I call it stacked income. Stacked, just like it sounds. You're stacking income on top, one on top of another. Boom, 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 and it compounds. And the effect of stacked income, well, quite frankly, it's staggering. I can't think of a better word to describe it. It's shocking how powerful stacked income is. Now, W-2 income, that's the job income, right? They call it W-2 income because that's the form your employer sends to the IRS at the end of each year. And it literally shows how much you made, how much the employer pulled out of your paycheck, and it gives a gauge, depending on how much you're paid, as to whether either you owe money or you might get money back. But it's a reconciliation statement, is that W-2. So that's why they call it W-2 income. It's a job. It's where you trade time for money by an employer. Now, W-2 income just happens to be the most taxed of all income. Wow. Not only is it the hardest, we've got to work, we've got to trade all our time, but thank you, we're going to tax the heck out of you on top of it. How is it the most taxed income? Well, you've got your federal income tax, right? We're all aware of that. There's different brackets. The more you make, the more they pull. You've got Medicare tax. That's the flat tax on literally your compensation income. The rate's 2.9% as of 2019. Social Security tax, that's 12.4%. You pay half like Medicare, and your employer pays half. If you're self-employed, you're paying the entire stack. And maybe I should have said that about the Medicare. It's 2.9%, but you're paying 1.45, the employee, and then the employer's paying the other 1.45. But again, if you're self-employed, you're getting the full pop. So there's another 3 points. Social Security tax, 12.4, paying half, but if you're self-employed, you're paying the full 12. And then on top of that, state and local taxes. Thank you. There's even city taxes. New York City, I believe, has a city tax. So city, state tax, Social Security tax, Medicare tax, federal income tax. W-2 income is taking a beating. You think Washington, D.C. is going to be any better in the future in regards to W-2 income? No. Count on it. Now, passive income. That's why we invest in real estate. What is passive income? That's earnings derived from a rental property, a limited partnership. It's really, you're earning passive income on an activity in which you're not actively involved. Now, passive income is taxable, but it's treated different by the IRS. There's ways to offset it if you're setting up your investments properly. For instance, I'm taxed little to nothing on the majority of my passive income. A technical term, it's really net rental income or income from a business in which the taxpayer does not materially participate. You do nothing. Mailbox money, right? That's what makes passive income so great. That's why we're so passionate here at Lifestyles Unlimited about creating that passive income. Now, that third type is just what it sounds like. That third type of income, portfolio income, is investment income in a single portfolio, right? That's the stock market, dividends, interest, capital gains. It might be royalties. Keep that in mind. So those are the 3 types. I've identified the 4th type of income. I call it stacked income. Stacked income is a type of passive income. You must have passive income first and then grow it to a point to create that stacked income side. For example, 4 years ago, I refinanced 5 of my single-family homes, and I pulled $100,000 out to invest in 2 apartment communities passively. I put $50,000 into one opportunity, and I put $50,000 into the other opportunity. Both of those communities will sell this year. They're both projecting 100% returns. So if I put $50,000 in, I get my initial $50,000 back plus $50,000. That's 100% return. Now I have $200,000 to deploy into more passive deals. The money I put into those deals was first generation. My refinance was second generation. Now I get money back. That's third generation. That's stacked income. We're going to talk about that power of stacked income when we come back. My name's Mike Harrison.
Now more intel to build a better lifestyle from Del Walmsley.
I went and bought another deal, which was the guy who had sold me the 11 houses plus the first house. I bought 2 apartment complexes from him. One of them was a 16-unit apartment complex. The other one was an 8-unit apartment complex. And I bought those together in one company with another partner. And so I own 24 units there with those. I hope you see how this is going on, man. I hope you see. The next thing we bought was a 40-unit apartment complex. And some of the same people who were in the other deals all got into this deal. And so we now own a 40-unit apartment complex. And at this point, I'm managing a lot of real estate. And my retirement was starting to look almost like a job again. And so at that point, I decided I was going to start divesting myself of the small partnerships and start buying large apartment complexes where I don't have to work in the business anymore. So I sold off some of my stuff, bought myself a 64-unit apartment complex all by myself. Then I bought myself a 68-unit apartment complex all by myself. Then I bought myself an 88-unit apartment complex all by myself. And with those 3, I was making about $15,000 a month cash flow each, about $45,000 a month. I was at the point in my life where there was no return. At this point, I knew I was only going to get larger.
More of the Lifestyles Investor Show is coming up.
Welcome back to the Lifestyles Unlimited Real Estate Investor Radio Show. It's time to turn up the volume and fine-tune your passive income plan so you can create the lifestyle you've always wanted.
Welcome back to the show. I'm Mike Harrison. Today we're talking about the 4th type of income. I call it stacked income. It's really generational income. It's where investments, and I know it's hard to talk about money on the radio, but it's investments that you've invested in, and as those investments mature, you get your returns back from that investment. There's numerous different ways to get that back, and I'll talk about it. But then you take that income and you put it in more investments, and then those investments mature and they return to you, and you take that sum and you put that into more investments. It's a cash flow snowball, essentially. I've described it as such, but there's several different ways to do it, and it hits you from different sides. And obviously, the longer you're a real estate investor and the more you've been a real estate investor, the more you get these from different angles. But I'm going to give you just one example, and I've got numerous, and I touched on it in the last break. But 4 years ago, I had numerous rental properties, and I took 5 of my houses that had some additional equity in those houses, and I call that dead equity, okay? It's just doing nothing. It's sitting in there. So I refinanced 5 homes all on one note, okay? This was just a one-time boom. I went to some private money and refinanced 5. It wasn't conventional by any means. And I pulled out $100,000 from those 5 properties combined. And I took that $100,000 and I broke it into half, 50 here and 50 here. Now, keep in mind, my first generational money was money out of my pocket where I purchased those homes, okay? I call that first generation money. That's money that I had, and I said, I'm going to get into real estate, and those houses were part of what I was doing at the time. First generation money, earned W-2 money is what it was. Invest in those houses. Now we've got some equity. Essentially the investment has grown. I was able to pull 100 out. What did I do with that 100? Did we go to Tahiti? Doggone it, no, we didn't. Did we go travel the BVI on a catamaran? It crossed my mind. I would have liked to. No, I invested it, boring, in 2 different apartment communities, 50 here, 50 there. Now, both of those, that was second generation money, okay, if you're following me. Both of those communities are for sale right now. I believe one even has a letter of intent on it. They're going to sell. 2 different lead investors. And we're projecting 100% return, okay? I don't know exactly what it's going to be yet. It's probably going to be greater, but for math on this show, let's keep it simple, 100% return. So $50,000, each deal is $100. That's going to turn into $200,000 when it comes back to me, okay? Now we have third generation money. First generation bought the house, second generation is the refi money, third generation is the return of those investments. So twice as much to deploy into more passive deals. Okay, so I'm going to put it in those deals. Now, what's going to happen 3 years, 4 years, 5 years from today? Well, those deals are going to mature. We're either going to do a refinance, we're going to do a sell, however the plans for the property at the time will reveal themselves, whatever makes sense in the future, right? We don't have a crystal ball, but we're investing in these properties for a reason. These are value plays or hybrid plays, so there's going to be a return. Now that's going to be fourth generation money, and we're going to stack those on top of one another, okay? And we're going to continue to stack it. So essentially, 100,000 becomes 200,000. This is only if you made 100% returns. I've seen much greater. 200 becomes 400. 400 becomes 800. Are you following me? This is just one example, very simple. Something else I did a HELOC a few years ago. I pulled $100,000 out of my personal home. I put that into an apartment community. That apartment community, for instance, is for sale this year as well. So the HELOC, second generation money, pulling it out of my house, put that into an apartment deal, and now that apartment deal is going to sell. I believe that one's somewhere in the neighborhood of 150%. Again, are we going to take that money and go rent a jet and blow it all and do something really ridiculous and buy the big watch and the fancy car? No, and no. We're going to put that into more deals. We're going to compound this. We're going to stack this income so it compounds. And then again, the power of all this is staggering. If you missed it earlier, I mentioned that class that I sat in at the Lifestyles Unlimited Wealth and Passive Income Expo that was just this past weekend in Houston, Texas. And there's a class, and it's a gentleman I know. We'll just call him MJ. Now, MJ, what's unique about him is he's an engineer. So he actually tracked all this. There are dozens, if not hundreds, of Lifestyles Unlimited members that have done this and are doing this exact same method, okay? This gentleman, he's a wonderful engineer. He tracks everything he does, and so he was able to put it together into a case study. And that case study, the title of it is How I Turned $400,000 into $4.45 million. And he did this over 10, 11 years. He couldn't have done this without that power of what I'm calling that fourth type of income, that stacked income. Can you imagine that? That compounded wealth? Generational wealth is what that is. Do you ever sit back and wonder, I'm sure it's crossed your mind, how, let's just say, these historical wealthy families in America, how did they come about? Somebody always had to start at some point, and they were wise and they were frugal. But you know what they were doing? They were stacking their wealth. They were stacking their returns. They were stacking their income, not over 9 years, like I've done, not over 11 years, like MJ has done, not over 30 years, like Dale Walmsley has done. They've stacked it over decades, over hundreds of years. And I think the secret there is you can't have some knucklehead 3 generations down the line blow it all or destroy it. How often do we hear about that? What's that old saying? They asked some sheik or something like this in, I want to say Saudi Arabia, but that part of the world, very, very wealthy individual. And he said, my grandfather rode a camel. I drive a Rolls Royce, and my grandson will ride a camel. And what he means by that is it was his grandfather that worked and sweated and built and created that investment strategy, that cash flow snowball, as I call it. And he stacked it, and he stacked his wealth, and he stacked his wealth, and he just reinvested and reinvested. And now 3 generations later, the man telling the story is driving a Rolls Royce. But he also recognizes that he's only 1 or 2 generations away from it all being destroyed. So that's why he said, my grandfather rode a camel, I drive a Rolls Royce, and my grandson will ride a camel. So that fear's in the back of his mind. This seemed like a pretty smart gentleman. I'm sure he's working on making sure that doesn't happen. So all it does is it takes one bad actor to destroy the future wealth for the entire family. So what are the keys? How can you create stacked income? Well, one, you need passive income. Okay, and the best way to do that is through real estate. It works with both houses or multifamily. I've done both. I've created stacked income from both sides. And again, that's that fourth type of income we're talking about today, stacked income. Number two, the most important part of this entire process, stay disciplined. You're going to get this money back from a refi or a sale, and you're going to drool, and you're going to go, wow, I really want this, or I need this, or I'd love to do this. Stop right there. Reinvest the proceeds. Put that into another deal. Maintain the cash flow snowball. John Pry, pretty famous guy here at Lifestyles Unlimited. He's a super passive investor, very wise man, an engineer himself. You're hearing a theme. These engineers are really good at this. He says, don't eat your seed corn. Replant it. Put that crop back in the field. Grow a new crop. Put those seeds back in the field and grow the new crop. What's for you? The cash flow. Okay, the cash flow from these investments is what's for you. The refis, the sales, the windfalls, those are for reinvestment. Again, I call it the cash flow snowball. To me, you put $100,000 in my hand, it looks like $4,000 to $6,000 on an annual basis. And although I know that's boring, I know you're wanting to go, Harrison, it looks like a new boat. Harrison, it looks like a trip to Hawaii. Harrison, it looks like Tahiti. No, it doesn't. It looks like $4,000 to $6,000 because I'm reinvesting and I'm stacking. So I want you to do something today your future self will thank you for. Create that stacked income.
Del Walmsley on how to live the lifestyle.
When you get to that point where you realize the dire need for people to have a job, and you understand the dire need for your product to be delivered to your customer, now you realize that you're supporting both. You're actually creating a way for these people to survive. So I have tenants. Tenants can't buy homes. They can't buy places to live. They are totally dependent on us producing clean, functional housing at a decent price. Likewise, my employees need money. And so they had the skill sets to provide the clean, functional housing in return for earning a wage. Now, I get paid because I figured out how to go get somebody else to lend me money to take risks and buy this business. I am taking the risk of hiring these people and knowing I have to pay them whether or not we make any money. I'm taking the risk that tenants will move in and maybe do damage or not pay. I'm taking all that risk. Yet, with the skill sets of understanding how to deal with that.
My name's Mike Harrison. I want you to remember, it's not the money, it's the lifestyle. See you next week and make it a great day.
The Lifestyles Unlimited Real Estate Investor Radio Show is for entertainment purposes only. Please consult a professional regarding your personal investment needs. Nothing presented on the Lifestyles Unlimited Real Estate Investor Radio Show constitutes an endorsement, recommendation, offer, or solicitation to buy or sell any product or security.